A warm morning to all the participants present here. With a great pleasure, I would like to introduce our resource person, Dr. N.R. Ravindran, Associate Professor and Head of the Department of Commerce and Honors, St. Joseph's College, Trichy, to throw the light on the cost-benefit approach to heritage management. We welcome you, sir. Time isn't favorable to talk about this entire performance period. And I would like to throw some light on its major academic activities. Dr. N.R. Ravindran has been worked in St. Joseph College, Trichy since 1990. He has guided 15 scholars, PhD scholars, and 28 MPhil scholars. He has been the Dean of School of Management Studies and UGC Affairs at St. Joseph College, Tiruchirappalli, Tamil Nadu, from 2012 to 2016. He has been served as a coordinator for international collaboration and international students since 2013. He has been a member of St. Joseph College Governing Board from 2012 to 2016, and he's been the director for Pondicherry University and the St. Joseph College MBA tutoring program since 2017 and 2018. Apart from this, he has authored many books on human resource management published by the Pearson Educational International Publisher, suggested as textbook of AICTE in the model syllabus for the PG Diploma and Management program. Include as textbook reference for MBA and BBA program in 19 universities and several autonomous colleges in India, including Tiruchirappalli. Apart from this, additionally, he has worked on books on Principles of Management, second edition, published by the Pearson Educational International Publisher, New Delhi. He has also authored a custom book on management along with the Quo and 6 other foreign authors from Gujarat Technological Universities. Apart from that, he has worked twice with the Pearson Education and the good e-learning services, New Delhi, for developing story-based case studies for reschooling during summer 2020. Without taking much time of your time, sir, with esteemed pleasure, I would like to hand over the session to you, sir. Thank you, sir.
Thank you, Professor Magdalene, for the introduction. Dear participants, I think this is the second time I am meeting you. I had an opportunity to see you all during that welcome address. Now I'm going to talk about cost and benefit approach to heritage management. You would already attended many heritage management related webinars, seminars, FDPs. In all that, you would have discussed about the various aspects of heritage management. So when we wanted to apply for this online FDP, we made it very clear that besides the usual perspectives that one gets, they must also have a business perspective towards heritage management. And in that context only, we have applied for heritage management, a business perspective. And throughout these 5 days, we are going to see the core of heritage management and also the various functional dimensions of heritage management. Like, what is the role of human resources here? What is the role of finance? What is the role of marketing in promoting and preserving heritage management? Today, I'm going to give you an accounting approach to heritage management. As a faculty of accountancy, I thought I must give some accounting approach and what is the state of affairs in heritage preservation and promotion from accounting point of view. That is the intention behind my lecture today. In 2016, I had an opportunity to visit Metropolitan Museum in New York. And of course, I also had an opportunity to visit National Heritage Museum in New York. When I was visiting this Metropolitan Museum in New York, the people were saying that we have got a priceless collections. At the end of the day, I realized that one day is not sufficient to see that museum. And I also learned from others that we need at least 5 days to have a complete look at this particular museum. I said that there are a lot of priceless collections in that particular museum. For long I thought that priceless means valuable, invaluable, very costly, like that. But when I looked at the financial statement of Metropolitan Museum recently, I found out these collections are priceless. There is another meaning for that. It has no price. It has no value. In a strict financial terms, all these collections, whatever it may be, they have no value at all if you see their balance sheet. In that balance sheet, you find values for their buildings, for their machines, whatnot, for everything, for their cash, for their bank account, for everything you find value, but not for all the precious collections they keep. And the whole activity of that entity revolves around that collections. And you may be wondering what I am saying, how far it is true. Let me show you an annexure provided to the financial statement of Metropolitan Museum. And there they mention collections in conformity with the accounting policies generally followed by art museum. Of course, for that matter, any museum, the value of the museum collections has been excluded from the statement of financial position. This is the word that struck me very hard. You know, they have not given any value for all the collections they are keeping inside that museum, whatever, whether it is an art museum or any other museum, whatever it is, but there is no value. So I started to wonder why it is, why there is no value for such valuable things, which is our connect with the past and the future. To get into that, we have to have some perspective of the background of the whole issue, the whole dimension. Why there is no value for these collections. I mean the financial value for these collections. As a person who is an expert in heritages, tourism, everything, you might think differently. When I say there is no value, I don't mean the cultural value or a social value. Such values I don't mean. I talk strictly in terms of financial value. Now we are going to discuss about why there is no value. What is the problem if there is no inclusion of such items in balance sheet? And to include such items in balance sheet, what we need to do? What are the requirements? What are the criteria to be fulfilled to include such assets in the balance sheet? What will happen if we continue to leave out such assets in the financial statements? And this cannot happen. And everybody is aware of it. A lot of work is going on. A lot of discussion papers are presently available about how to include such assets. So that is what we are going to discuss in this program. Of course, we all often use the term asset. When we say asset, there is only one meaning. Anything that provides an economic benefit to the user. The benefit are normally associated with the future. But of course, as an accountant, as a professor handling accountancy, I can say there are two types of assets. One is, we call it as a current asset, and another one is a non-current asset. In case of current asset, the benefit is available within a year. But in case of non-current asset or otherwise put as a fixed asset, we say that benefit spreads over many years. Put it simply, the benefit goes beyond a year. So that we call it as an asset. Anything can be an asset if it provides an economic benefit. But what is the heritage assets? So this is very important, and we are going to look at these heritage assets only. And here, if you look at what the financial reporting standards, FRS talks about heritage assets, it says that anything that has a historic, artistic, scientific, technocratic, geophysical, environmental qualities and has a contribution to knowledge and culture. You see, the financial reporting standards stop with the contribution to knowledge and culture. And they don't talk about the financial values, the financial contributions. That has been missing. So put it very simply, a heritage asset is anything that has a cultural, environmental, or historical significance. And it may sound quite familiar for you. If you have this background, if you come from this background, this will have a very familiar connotation. But you have to understand one thing. This cannot stop here. You cannot miss out the financial significance of an asset. Now, if I have to go to a bank to get a loan, and I say that take my house and give me some loan, what do they ask? They ask only one thing. What is the value of your house? Then I will, so this is my value. I bought it for this value. I constructed it for this value. I spent this much of money. See my receipts. See my vouchers. See my supporting documents. And then the bank manager says, okay, no issue. We will give you loan. Can we do like that for heritage asset? That's the biggest question. So when we get deeper into that, from a heritage management point of view, we have two types of heritages or assets. One is cultural heritage, which we normally refer to monuments, buildings, archaeological ones. Then natural heritages, which includes physical, biological, geological, and physiographical formations and sites. But all come under heritage management. And in a simple point of view, for people who have no background of this heritage management studies, etc., I would put it simply as historical buildings and monuments, archaeological sites, conservation area, and natural reserves, and of course, works of art. These can be considered as examples of heritage asset. I tell you, this is not exhaustive. I have just given you some examples, and there may be many other things which can come under it. So now we are going to get into the actual issue. What are we going to do? I am going to make a comparison between human resources, that is the people working in an organization, and heritage assets, the collections, what we put it as collections we find with all that heritage value. Why do I compare human resources or heritage assets? Why I combine it or why I club it? That is a very important one. You will find a lot of similarities between these human resources, or that is people who are working in an organization, and the heritage assets, the collections in a museum or any entity. The first and foremost one, both do not find recognition from financial point of view. Both do not find inclusion in a financial statement, for say in a balance sheet. You take any company. India is a predominantly service economy now, and our major contributor now is software industries, IT companies. I don't know whether you had ever seen a balance sheet of an IT company where the primary asset, that is the human beings, are left out. You find everything included in a balance sheet, but not the real contributors, real assets of a software company or IT company, that is the human beings. Why? Because there are certain accounting standards, concepts, and conventions which these people, these assets, are not able to meet with. They are not able to meet with these criteria. And because of that, they remain outside the balance sheet. And the same is the case with the heritage asset also. They are very costly. They are central to the entity. I refer to the museum and whatever it is, but still they do not find a place in the balance sheet. What are the other similarities which we find? Some of them make them ineligible for inclusion in the balance sheet or in the financial statement. The first and foremost common thing about human assets or human resources and heritage assets are both appreciated over a period of time. When an employee joins an organization, he gets a salary. Then after a year, he gets an increment. But you take any other physical asset, a machinery or whatever you plant, whatever it is, when you buy it for a value, then after that you put a depreciation on that value. But similarly for heritage assets also, you have it, but the value of such assets go on increasing. When it comes for some auction at a later stage, which is very rare, we find an increase, manifold increase in its value. So that is the major similarity. Both are excellent assets. I would say central assets and excellent asset which appreciate over a period of time without validating such value. To validate such value, you will have to include them in balance sheet. Then the next one, which is the foremost one, for not including these two assets in the balance sheet, the acquisition cost or purchase cost of this asset. Say, for example, we can very easily understand, if I need a machinery means I will buy it for a definite fixed price. I need a machinery, I need something, then I'll buy it for a definite price and I have the evidences available with me. Nobody can dispute that. So I accept that value. But when it comes to people working in an organization, I don't buy people, I just hire them. And for that, I don't pay any fixed amount at the beginning. Every month, based on their performance or time basis or piece rate basis, I provide them salary, which I cannot consider as their value. And I cannot capitalize on that value. And same is the case with the heritage assets also. We would have bought it long back, or we could have got it through donations. We could have received it through donations, or we might have got it through some historical events, one country capturing another country. All this would have happened long back, and these would have changed hands. Consequently, these heritage assets would have changed hands. Now we don't know what its value. So we don't know the definite value of an asset. Leave alone the increases, rise in the value, leave alone that. Even the basic and fundamental value we don't know. The next important point about these two assets are, what is the useful life of an asset? Artificially, we put retirement for people. But can he work after his retirement? We don't know. We cannot say with any sense of accuracy. And similarly for heritage assets also, we can never say this is the time span of this particular asset. When you got this asset 1,000 years back, how long you are going to keep this asset? How long this asset will be worth keeping it? We don't know. Maybe for another 1,000 years. If you say you have no definite period, again you make such assets ineligible for inclusion in the financial statement. The next point, which I already explained, both assets are central to the survival of an organization. Whatever it may be the nature of the organization, you can never have that organization functioning without these two assets. And this is another common one. Then another very important one, we are going to base our discussion on that point, is both assets remain largely out of financial statement for a very long period of time. So mark this particular word largely. It is because now some initiatives are being undertaken to include these assets within the financial statement. How far we are successful? No, the success is very much limited, but still the efforts are going on. Any more similarities we have? Yes. The first and foremost similarity is the moment we start including those assets, when we start capitalizing and including that asset in the balance sheet, then naturally what happens is there will be a huge increase in the balance sheet value. So what? So what if the balance sheet value increases by several fold? No, there is a problem. There is a concept, there is an accounting concept that prevents that. What is that? We call it as duality concept that we will be seeing perhaps very soon. And there is a general feeling, if you include these assets which have got no definite value. We don't know the useful life of these assets, and without losing objectivity, the value cannot be measured. Then there is a general opinion that the quality of the whole financial reporting would be compromised. There might be a possibility that the whole objectivity of a financial statement would be compromised and the subjectivity would creep in. So these are the hurdles I've just presented before you. What are the hurdles we normally face in case of these human assets and the heritage assets? Now let us see what is the specific problems we have with regard to heritage assets. I think you can keep the problems of human assets at the back of your mind while we were discussing in specific terms the heritage assets. The first and foremost one, the present problem is that these heritage assets do not get included in the financial statements and based on the market price. Market price is not acceptable in financial statements. You cannot show anything as anything in a market price, because the market price is only speculative. I may quote one price and you may quote another price. The X may quote yet another price. Whose price is right? We will not know that unless we sell it actually. Is that possible to sell it? In some cases, in most cases, legal and statutory obligations, legal and statutory requirements prevent us from disposing of the assets and getting even a quote for that, leave alone disposing of or selling it. So that is a very, very important point that prevents inclusion of heritage assets in financial statements. Then next one. The purpose of showing an asset, fixing a value, is so that eventually such assets are replaced with new asset so that the organization continue to function. I have a machinery which has a life of 10 years and I provide a depreciation. What is the purpose of providing depreciation? At the end of the 10th year, I will have sufficient money to replace this asset. If I have no purpose, if I have no business of replacing an asset, what is the meaning of providing depreciation? What is the business of including it in financial statements? Then it serves no purpose. And these most of us, or I would even put it, all of these heritage assets are irreplaceable in nature. And I said when I was discussing earlier, it is very, very difficult, if not impossible, to estimate the useful life of heritage assets. Whatever problems we have just discussed are specific to heritage assets. Now we are getting into the important of what prevents us, what stops us, what is the obstacle from including heritage assets in the financial statement. If you want to include something in a financial statement, whether it is an income and expenditure statement or a balance sheet, financial position, statement of financial position, you have to ensure that they conform to the existing accounting standards, concepts, and conventions, which is difficult in practice as far as these heritage assets are concerned. Now, what might come to your mind now is what are those accounting concepts and conventions? International accounting standards prescribes various guidelines, but there are certain fundamental concepts and conventions which every asset should fulfill, and every asset should fall in line with these concepts and conventions. If you have a commerce background or accounting background, financial background, all these I have mentioned here must look very familiar to you. But the perspective is different. I'm going to look at it from the perspective of a heritage asset. As I said earlier, the connect between our past and the future. The first and foremost concept is that money measurement concept. Anything that can be measured in monetary terms alone can be included in financial statements. What is the problem? What is the heck? When I say it should be in monetary terms, it has to be in a definite value. It has to be in an indisputable value. You understand? It has to be indisputable. I say one value and you question me. That is not the value. That is why we have a concept called the second one, historical cost concept. When you say, I want to include this asset in your balance sheet, then what I would ask is, what is its purchase value? When you show me evidence for purchase value, nobody can dispute it. I cannot dispute it, or somebody else can dispute it. No, this is not the purchase value. No, you would have registered it, or you have some legal document supporting the value. That historical cost concept is missing in heritage assets. And because of that, that purchase value is missing. The exact purchase value may be missing for maybe for 80% of the heritage assets. And especially for those who were bought long time ago. So there is a money measurement concept which says everything should be expressed in monetary terms for inclusion in the financial statement. But there is a caveat which says it should be in a historical cost concept. You would be surprised if you look at a balance sheet. You would be really surprised in the sense the buildings which may run into several crores, but they would have been recorded in the financial statement in its actual purchase value. If you deviate from that value, then there will be a subjectivity. Now the next concept is duality aspect concept, another important concept. See, this is called a double entry concept or double aspect concept. What is this? I said, if you include the heritage assets in your balance sheet, somehow you fix a value and you include it on the asset side of your financial statement or balance sheet, well and good. But you must also show an equivalent amount on your liability side. Because the business is based on certain concepts. That is called the business entity concept. In case of business entity concept, even the owner of the business is treated as creditor and he is lending loan. Whatever money he gives for his own business, he is giving only loan. We call it as capital. Without capital, you cannot buy an asset. Without loan, you cannot buy an asset. So that at any point of time, the liability should be equivalent to asset. If an asset alone goes up and your liability is not moving up, then you cannot match it. You cannot tally it. What money you get, you do business. This is how it happens. When you get a reserve or when you get a profit, you are getting an equivalent increase in your cash, or you get an equivalent increase in your debt, the money owed by outsiders. So that is not possible in case of heritage assets. If you are buying it recently, then it is okay. Somehow you borrowed some loan from the bank or financial institution, and using that you bought some heritage assets and you are keeping it in your museum or wherever you want to keep it, then that can find an inclusion because it fulfills the duality concept. Then a realization concept, and that is why I talked about useful life. How long this asset would be kept? What is its realizable value? This is very important for providing depreciation. If you want to provide a depreciation, then you will have to have that, you will have to fulfill that concept. Of course, this going concern concept. The business should be considered as going on forever, but not the assets. Asset must have a definite life, then only it is possible to provide depreciation or other provision, and then it is possible to replace it. But there also we are facing problem. Often we are not going to replace the heritage assets. And of course, the matching concept is similar to going concern. Then if you talk about convention, this is very important. There must be consistency. Whatever system you are following for one asset, you should follow for all other assets. Whatever system you are following earlier years, you must continue to do that in future year also. You cannot say, I value this heritage asset like this, I value that heritage asset like that, and please accept me. That is not possible. Then for every asset, full disclosure is very, very important. You cannot go for a partial disclosure of an asset. I put partial value for an asset. It is not possible. Then there is a conservation concept. You have to, you cannot inflate the value of an asset. What is the basic safe value? Only that you will have to put. That is very important in case of conservation. This conservation is different from the conservation you understand. Conserving the asset, that is not that. While fixing the value, you must fix the value in such a way it should be market value or cost value, whichever is less, not whichever is more. So that also objectivity is required. What is that materiality? In materiality, you have to understand it must be worth including it. Its inclusion must have an impact on the existence of the business. It must have an impact on the preparation of financial statements. If it is not going to affect the preparation of financial statement, if it is not going to change the financial status and position, there is no point in including it. Anything that affect or anything that impact the financial statement alone should be included. Now, what struck my mind is this picture, and this is the Rosato Stone. I think this has led to the development of Egyptology, and has started with this particular stone. And it was found in Egypt, and it was initially with the French. Then it had gone to British when they captured the territory, French territory in that place, and absolutely there is no value. But now we are able to read all the scriptures and whatever is engraved with the help of this language. So what is its value? Can we say its value is 0? It's a piece of stone. Or it's a value running into billions of rupees? We don't know. Until we fix an exact price for this stone, it won't be possible. And you cannot include it. So now, when we talk about these heritage assets, what is the exact problem? Where we need to work on it? What is the measurement basis? Earlier, I was talking about money measurement concept. Should I consider the past value or the current value, or put it as cost, or the future value, or the value decided by some group of experts? And if there is no consensus, should I go by majority? All these we'll have to decide, and you'll have to disclose. How you decided or how you arrived at the value of an heritage asset, you must disclose. And what is the depreciation method you are using if it is an asset? I said any asset will have a depreciation. And the depreciation is an recognized expenses. Then what is the gross value of that asset? What is the total depreciation that you have provided? What is the cost at the beginning and what is the cost at the end of a heritage asset? Can you provide it? As a person with that background, can you tell me what will be its value in the beginning and what is its value at the end? It is not possible. Now you might be wondering, why should I disturb the status quo? That is always a problem. Why should I discuss the status quo? Everybody is happy, then why should we bother about it? Everybody will be happy if we don't know what best can be arrived at the future. What is the best possible way is available. Until we find another way, we will be happy with the status quo. If you fix an exact value in financial terms and include the heritage assets in the financial statement or balance sheet, you find the benefits. Even providing these assets as a mortgage, as a security, you can get loans, financial assistance from different financial institutions. Otherwise, you have to show only the buildings, or you'll have to completely depend on the donations, or the charity funds, or the government assistance for developing your heritage centers or heritage entities. But now, with the authenticity, you can approach any financial institution for securing loans, and then you can develop it. Now, as you may be knowing, and now because of this pandemic, the gate collections have crashed. People are seeking assistance. They are seeking our mercy to sustain such initiatives. Not necessary. If you know the value of these heritage assets, that is not at all needed. You can just go and sit across the bank manager or any financial institution manager. You say, this is my value. So look at my balance sheet. Whenever you go and apply for a loan, what do they ask? They ask for your financial statement. If you can include your heritage assets in your financial statement, you are the king. You can go and ask for any amount. Then another one is, we normally provide general security measures for our heritage collections. But once you find out their value, based on their value, you can provide security. This is what we do in accountancy, in financial accounting. Based on the value of the inventories, based on the value of the stock, we provide different kinds of security and safety measures. Because when something is lost, very little amount would be lost. When something is lost, it may even disturb the existence of the whole business. And similarly, once you know the heritage value, then you can ensure what sort of safety and security measures are needed. Then, of course, you can go for a better utilization of assets. Now you are using these assets. Only way you generate income from these assets is through this entry fee and gate collections, etc. But you can find multiple more ways in which you can start generating funds through these assets. And discriminatory gate fee, discriminatory entry fee can also be introduced, provided you know the value of each of your heritage assets. And then, if at all there is a need, if at all there is a situation wherein you will have to dispose your assets, you may find an exact accurate price, the price that reflects the market value, if you have included such assets in your financial statement. Otherwise, what happens? You put it on auction and then the price is decided there. And if the bidders, they already decided everything, then you would lose money and you would be the loser. So you would have seen in storage wars, in some of the English channels, I think you would have seen storage wars. Sometimes it is a real bidding. Sometimes they already decide, they combine together and go for a joint bidding, and the ultimate loser will be the one who auction it. But once you have a definite value in your financial statement, you don't need to bother about it. You don't need to fear anything, because that value cannot be disputed. Now we come to the next and the major important one. Should my heritage asset be capitalized or not? Should it be included in financial statement or not? Should I find an accurate value for my heritage assets? This is a very important one. Or should it not be capitalized? Should I leave it as it is? If I decide to capitalize it, if I decide to fix an exact value and include it in financial statements, how I have to do it? Or if I don't want to do it, and if I want the status quo to continue, again, it is our option. But this cannot go on forever. Now we know that whatever that happens in data science, so much of development is happening here. We are living in industry 4.0. Now there is an Internet of Things, Internet of System, artificial intelligence, whatnot, data analytics. It is possible for us to do anything and everything. It is possible also to fix an exact value, provided we have certain systems, provided we put in certain systems. We believe in certain accounting systems and standards. So, okay, I don't have an exact value. Still, I want to include it in my balance sheet. I want to include it in my financial statement. Of course, we are working on that. The whole world is working on that, how to do that. Presently, there are 3 approaches in which we are trying to put value for these heritage assets. Unless until you know the exact cost of your heritage assets, it is impossible to get the maximum or optimum benefit out of it. And that's the reason I put the title as cost benefit approach. Both are presently uncertain. Whether it is a cost or whether it is a benefit, both are presently uncertain, and that is why we are not able to find a way out. Now, let me explain to you what are the three approaches presently available for including or not including the heritage assets in the balance sheet. What are the three different ways available for including or not including it in this balance sheet? The first one is called the existing mixed capitalization approach. The other one is a full capitalization approach. And the third one is non-capitalization approach. Right. What is this existing mixed capitalization approach? This is very important one. This is the existing practice. And some of the entities are adopting this particular. But what is this? How it is done? This is very simple. If I know the exact price of a particular heritage asset, I include it in a financial statement. Say, for example, in 2002, I bought a particular asset, an art. I bought it from somebody, or I bought it through auction. Somehow I got it, and I have a legal document available with me which shows the price at which it has been bought. No issue. You can very well include it in the financial statement. In contrast, there is another asset which was obtained, which was received long back. I told you now, Rosato Stones. In such cases, you leave out those assets. It's very simple. You show all the assets for which you have a definite value, which fulfill all the accounting concepts, conventions, and standards, and leave out other assets. What is the benefit? We are reducing the damage. We are reducing the inaccuracies of our financial statements. Slowly and steadily, we are bringing in more and more assets into the financial statement. In case of human assets also. Now, a lot of efforts are going on to include value for the human assets also. That is for the people. There we call it as two types. One is cost-based approach. Another one is value-based approach. What is that cost-based approach? If I hire a person, how much total amount I spent? I would have given an advertisement. I would have spent money on conducting interview. I would have spent money in bringing him. You would have joined, and you would have incurred some losses, learning losses. I would have given him some training in that process. Let us say everything comes to, let us say, 15 lakhs. All the whole process for a higher end position, I bought and spent 15. I put that as my value in the balance sheet. But of course, it's not possible now because it affects the duality concept. We cannot show anything as a liability. How I arranged for that money, that is a problem. Of course, now at present, it is treated outside the balance sheet, outside the financial statement. This is one way. The another one is value-based approach. In value-based approach, what do I do is, what is the total salary I am going to pay for him throughout his tenure? Suppose if a person has a 20 years of service, how much money, 20 years of for 20 years of service, how much money I would have paid at the end of 20th year, and I discount it for the inflation and other things, and the discount value I am using, and then I bring it down to a particular value and I show it in the balance sheet. So what I'm saying is, so for human assets, now the efforts are underway. And similarly, for heritage assets also, some efforts are underway, which I am going to explain in full capitalization approach. So this is a very simple and easy to adopt approach. This is the existing approach, which we call it as mixed capitalization approach, wherein part of the assets are shown in your balance sheet, part of the asset are left out. Of course, the consistency policy might not affect, because you are not at all going to recognize certain heritage assets. It will be there with you. It will have a cultural value. It will have other historical value, but no financial value. It will remain as it is, what it is now. This is the existing approach. But as I said earlier, this approach cannot go on forever. You cannot remain like that forever. And that is why we are undertaking the next approach that is going to be the future. This is called full capitalization asset. We have to find a way to fix exact value for all the heritage assets that are under your custody, that are kept in your entity, in your organization. Whatever may be the organization, but that is defined as heritage assets, then you will have to adopt this. And of course, a lot of discussions are presently going on to make this approach possible. There are two ways in which this can be approached. Of course, you might have known about the Bangalore Tomato, the story of Bangalore Tomato. When earlier we have that local variety only, the traditional tomato only. But when mechanization was taking place, where they were using machines to harvest tomato, but these sharp blades were causing problems. When the sharp blade touches this traditional tomato, it burst open. So the loss was huge, unacceptable. So they were trying to change the characteristic of the blade. They were trying to change the size, density, and other things of the blade. But nothing was working. Then somebody came up with an idea. Why don't we change the tomato? Instead of changing the machine, why not we try to change the tomato? Then they have introduced the latest hybrid variety in India. Here in this part of country, we call it as Bangalore Tomato, which has a thick skin. Even if the blade touches the skin, it won't burst open. There will be some cut, some injuries, but it is still saleable. So there is a lateral thinking. Now they have solved it. Similarly, now work is undergone, work is underway to slightly change the accounting standards, conventions, and concepts. Slightly tweak these concepts and conventions so that this crucial, important asset is brought in. When the value runs into million, you will think twice before you put it on sale, before you attempt to dispose it. If you don't know the value, then naturally, obviously, when we are in a dire straits financially, when we are in trouble, we will try to put it on sale so that we get some money. And that is why now that efforts are underway to make sure that accounting policies are also slightly modified. Now the efforts are going on in most of the developed nations, including India, to find some way to include it so that every asset is included in the financial statement. There are two ways, I tell you. One is you have a definite purchase value and then you include it in the balance sheet or financial statement. Then now we are looking at another possibility. You put a group of experts. Let these experts assess the value of the heritage asset. And let us encourage consensus among these experts to fix the value. If there is no consensus, then let us go by the majority. If 5 people look at 5 experts from different fields, they look at the asset and fix the value. And if there is no consensus among them, then what can we do? Let us go by the majority. But somehow we arrive at a value. Somehow we arrive at the value, and that value gets included in financial statement. Then you might say there is an inconsistency in what I am saying. Earlier you said subjectivity would creep in, objectivity would be lost. Now you say you put some group of people, let them decide the value and then include it. No. That is why I gave the example of the Bangalore Tomato. We will have to look at the whole thing from accounting point of view also. Those people need not be so stubborn, and they also be dynamic. They should also be open, flexible, so that this very crucial, important assets are brought in and provided with the real actual value. One thing is very important, as you can see in the third point, the evidences supporting the value must be sufficient. There must be sufficient evidences available for supporting that particular price. This is the second one. This we call it as a full capitalization approach. Now we go for the last one. I would put it as a non-capitalization approach, or I would also put it as a status quo approach. What is that status quo approach? No capitalization of heritage asset. Whether it is purchased in the recent past or in the distant past or belong to ancient times, let us not bother about it. Let us preserve the objectivity of our accounting system as it is now. Let us not bother about it. Let this remain outside the purview of the accounting system. Let it continue as it is. If at all in future, when they come for sale, we will find out the exact price. You may not include, but the buyer of your heritage asset, he would have the exact price, because there would be a legal document supporting it, supporting the price. And then from that position onwards, from then onwards, you would be able to fix the value for that heritage asset, and you will find that heritage asset included in the future financial statements. If not in your organization, at least in future, in somebody else's organization, you will find the value for such assets. But there is a huge collection of heritage assets. How many years it would take before we find the value for all heritage assets? Perhaps this world is not sufficient. This life is not sufficient. Again, if there is no way these assets can be included in a financial statement, then we have to be very practical. We have to be very realistic. Then we will have to keep the status quo. But as I said just now, status quo cannot continue forever. We would not have imagined what is happening today some years back, some decades back. But now we are astonished to see the developments happen. What happened in 200 years, now happening in 20 years. Perhaps in future, what happens in 20 years might happen in 2 years' time. And we would have found a solution for including heritage assets in the financial statement, so that it gets a complete picture and it gets what is due for this asset. For the people, we do justification, we do justice for the people holding these assets in a very painstaking manner, and hope and believe all this happens, and eventually we find a value for all the heritage assets and find the inclusion of these heritage assets in the financial statement, and the whole gamut of heritage asset preservation, promotion, everything takes a different plane. Thank you very much. We will go for a question answer. If you have any question to ask, you can just ask me, and I'll be happy to provide whatever I know.
Hello, participants. Now you can send your queries in your chat box.
Yeah, I am very happy that your question has come. Why it is necessary to have a cost-benefit approach to heritage assets? There are multiple benefits available when we adopt this cost-benefit approach. The first and foremost is you will know the exact value, definite value. I won't say exact value, the definite value of an asset. Once you know the definite value of an asset, it is easy to find multiple ways of using that asset. I said this is a pandemic time. We all are in a very difficult position. Across the world, we all are in a difficult position. You know, in Chennai, the crocodile zoo is there. They find it very difficult to run it, and they are asking for charity. The same must have been the case with the museums and other things in wherever heritage assets are maintained. But if you have a definite value and if you include it in your financial statement against that asset, it is possible to secure loans, and later on you can very well repay it. The next one is you have to change the way you are safeguarding your heritage assets. You cannot have a one-size-fits-all approach to protect your heritage assets. Some may have a higher value, some may have a lesser value. It is always good from the business point of view and other point of view. It is always good that you adopt different methods for safeguarding your assets. We call it as a ABC method for protecting different inventories. Similarly, you can also adopt it. The next one, as I said earlier, if you know the exact value of your assets, then naturally in your entry fee and other things, you can bring in changes. Your entry fee must reflect the value of your assets. Now you go for a common one. We have a costing called activity-based costing. Now we say, based on the utility value of every asset, we must fix the price. What is the utility value of every asset? And that should be the time. Say, for example, you stand in a queue to pay some money in a bank counter, and the bank put same bank charges for everybody. But what we now say is, if somebody is paying 1 lakh, you should pay a different bank charge. Somebody is paying 50 lakhs, you should pay a different bank charges. Somebody is paying only 100 rupees, let him pay different charges. And similarly, based on the value of your heritage assets, you can also go in for your other fee charges and other fee collection, gate collection, etc. So nothing would be lost, but everything, many things to be gained. Many things to be gained if you fix, if you adopt the cost-benefit approach to heritage asset. Now, I think there are multiple questions. And I think that you close, mute. So if there is another question, what adverse thing would happen if you don't go for cost benefit analysis? I think this pandemic is a very important example how this institution entities struggled to sustain. This is the best example because they were solely depending on their entry fee collections, and they couldn't find any other resource, any other source to mobilize resources. I am talking about the financial resources. If you know what is your value of heritage assets, and if it gets reflected in financial statement, as I said earlier, it is possible to utilize these heritage assets in some other way also. Instead of merely remaining as an exhibit, it can also serve you some other purposes. It can be your mortgage. It can be your lien. And of course, there is nothing wrong. It is better than selling it. It is better than disposing. You go and secure some financial loans, assistance, and then you repay it. So naturally, the only thing is, if you want to expand your entity, then this can also help you. These assets can also play a vital role in expanding your entity, its operations. I won't say profit, its operations, its surplus, and this is possible. So nothing is adverse except that there is a way I am presenting to you, so that using that way you can further establish, expand, and stabilize your operations. Now there is another question. Is there any way, is there any type of formula for calculating cost benefit analysis? Once it is accepted that heritage assets can be brought into the financial statement, whatever rules we are following in case of financial accounting, the same rule will be applied. Say for example, you fix a value, you bring it into the books of accounts, and then from these books of accounts, at the end of the year, it gets transferred to the financial statement. That is a statement of financial position. We call it as a balance sheet. In that, and then it will continue to be there. It will continue to be there, not exactly any formula per se. We follow the same accounting system, accounting process, or we call it as accounting cycle, and it will be treated like any other asset. You name an asset, I would say heritage asset is also similar to that asset, except that it is considered as a non-current asset, and it will have the same treatment like any other asset. Then I think I have another question. How cost management will work for a non-registered sites or monuments? Okay. Now, where financial statements are prepared, financial statements are prepared only for registered entities. Where financial statements are prepared, this method will work. If it remains a non-registered site or monuments, then again fixing the value will be a problem. Then you will have to get it registered, so that you come under that accounting standards, and you start preparing your financial statements, and eventually you will also be bringing in your heritage management. The next one is marketing can help to increase the value of heritage. What is your opinion? Yes, sure. I fully agree that proper marketing is necessary for any activity. Leave alone heritage sites, museums, and for everything it is necessary. And for proper projection of your assets, this will help you. This cost benefit approach will definitely help you, and in all your activities, from financial perspective, from marketing perspective, from human resource management perspective, from your operation perspective, from every perspective, this is definitely going to help you. Right, I think somebody asked a question. I'll come. Valuation of commercial market for supply. Okay, now I think a lot of questions. Let me. I think the questions are there. Valuation of heritage assets will create a commercial market for sale and purchase of assets. So should this be encouraged? I see it in a different way. Once you bring it into your financial statement, you are actually safeguarding your asset. You include it in 1 year and you remove it in another year, people will ask you, what happened to that particular asset? Now it remains addressless. Now it remains obscure. But once you bring it into your financial statement, you provide a transparency. And it will actually discourage illegal disposal of the heritage assets. So actually it is going to help you. Then very well compare the concepts. Okay, the appreciations can come later. Please, can you explain the monetary measurement and the historical concept again? Okay, I said that anything should to be considered as an asset for inclusion in the balance sheet or financial statement, it must be expressed in a numeric terms or in monetary terms. If a person is inside an organization, he does nothing means there will be no value attached. But he produces something. He produces some goods which can be sold in the market, then that carries a value. What is that historical cost concept? It's very simple. Any asset should be recorded in the business only in its acquisition cost or purchase cost, without bothering about when it was purchased last. You cannot go for realization value or the what I would say the present value or the market value. You must record it only at its original purchase price, so that there is no subjectivity. If you start recording the assets in the present value before selling it or before disposing it, you might say one value, I will fix another value, third person will fix yet another value, then it will be difficult to find an objective valuation of that asset. And that is why on a conservatism principle, what we say is you go by the price at which you purchased. That is the money measurement and historical cost concept. I said these are the two important concepts that prevents the inclusion of heritage assets in the financial statement at the moment. Let me see. Here we have a lot of heritage assets, the property in urban. Citizens are not educated. How come we make them aware about cost via involvement through local bodies and financial institutions in Rajasthan? Okay, I think I'm very happy that you have come out with a real problem and you have connected with your situation. I think that that is what I feel as a beginning of the whole initiative. Of course, the ignorance, the lack of awareness is a major problem, and that destroys the heritage asset also. Lack of awareness, we know what happens in some part of the world, in what happened to Bamiyan, where the Buddha statue was dynamited. No, what I'm saying is it is our duty to educate the people about not only the historic and other cultural, social values, but we must also educate them that what you are holding has a huge financial value also. They cannot do anything with that. If there is a monument, then they cannot do anything with that. So if there is a inbuilt engraved statue, they cannot do anything. But let them be proud. And let them aware that by fixing a financial value, we can also find some other utility for such assets. And there will be a development in their own region also. If it is properly projected, properly presented to the whole world, then people will throng those places. They will come here. But then the tourism potentiality would enhance. So naturally, people who are activists, who know about it, and they must convince them and ensure that everything is properly brought under legal sense registered, and the financial reporting system is introduced, and many other values are introduced for this. I think I got some more. Okay, nothing. Very good. I think others are, I think, just appreciation, and thank you for all your appreciations. If you have anything else, you can ask me. Can cultural heritage be calculated through accounting concept? Of course, there are two assets. One is the tangible asset and another one is the intangible asset. This is from financial perspective. Certain things which cannot be seen, which cannot be touched, which cannot be felt. In financial parlance, we say goodwill, and then patent, trademark. These are we considered as intangible assets. Similarly, this cultural heritage can also be brought under this particular intangible asset only, which we cannot actually fix a value. Of course, in financial parlance, we do fix a value for goodwill. We do fix a value for patent and trademark based on the profitability of the organization, based on how much profit earned by the organization in the past few years. We fix the goodwill. But here, in case of cultural heritages, I can put it as a intangible asset. Then a parallel process must be initiated to fix a certain value for cultural heritage also. But immediately, I don't think it is possible. But of course, a way must be found later on. But now for the physical assets, whatever physical heritage assets you are keeping, we must find a way out to include them in the financial statements. Okay, very good. If there is no more question, I'll be winding up by 1 o'clock. Only one point I wanted to say is the heritage assets are not comparable in nature. When we talk about machinery, of course, I can compare all the machineries, group them together. But heritage assets have a uniqueness. They have a distinct features. So naturally, every time we will have to refer to an accounting standard, whether to include such assets or not. And that is why I said in future it would be possible. That's why I said now we are living in industry 4.0. Everything would become a possibility, and for everything we would find a way out, and hopefully sooner than later we will fix value and we will get the complete benefit out of this particular heritage asset. Thank you very much.
Thank you, sir, for spending your valuable time with us and imparting knowledge on accounting of heritage assets and querying all your answers. And I hope now we all have a great insight towards the cost benefit approach on the heritage management. Thank you, sir.
Next session,
Next. Dear participants, your next section will be starting on 2:30 p.m. and your participants' attendance will be given in the WhatsApp group, in your chat box, in the Zoom meeting chat box, and participants are requested to join 10 minutes prior to the session time to avoid any technical glitches. As per the AICTE and ATL guidelines, in order to avail the certificate, the participant must have at least 80% attendance and secure at least 60% marks in the quiz. The attendance will be done to the Google Form links, which will be shared during the session. The participants are required to mark their attendance during each session by filling the Google Form. All all FDPs related announcements will be done over the mail or a WhatsApp group. Participants are required to join the WhatsApp group by clicking the link below. If you're not joined in the WhatsApp group so far, please check your registered mail. You are requested to join only through your registered mail ID. For schedule and timing of the sessions, participant can refer the brochure and it's already shared your email in your WhatsApp group. And you are requested to mute your audio and turn off your video during the session, but you can unmute audio during only the Q&A sessions. Please note that all the sessions will be recorded on the Zoom platform and will be stored in AICTE repositories. Use the chat box for interaction and ask questions only. Avoid unnecessary posts in the chat box. Use laptop or desktop for better experience. Now the next session will start on 2:30 p.m. Thank you, participants.